Srivatsa. So the first question is, how should one be looking at UTI Core Equity Fund for achieving their wealth creation objectives?
Yeah, thank you, Gunjan, for this question. If you look at the UTI Core Equity Fund, the strategy is pretty much very consistent in focusing on relative value across all the spectrum of large, mid, and small caps. And the fact that it has got a very decent share of large and mid caps, gives a lot of stability to the fund. Hence, for longer term wealth creation, a lot of alpha also is generated from the mid and small cap versus the benchmark, where we take active bets, which is very essential for wealth creation. The second part is, if you focus on growth and value, if you see the indices performance over a period of time, upwards of 7 or 10 years, they have more or less converged with each other as well as the benchmark. Hence, we believe that focusing on a certain style with consistency, in spite of intermittent underperformance, delivers very good longer term outcomes. And that is what we strive to achieve in the UTI Core Equity Fund by using this relative value strategy. Hence, we believe that any investors coming in with a longer term time horizon, this is a very ideal fund.
Which are the sectors where the fund has overweights and underweights exposure under the fund?
If you look at the core thesis of what's playing in the fund in the last 1 year, has been the strong domestic demand. We believe that given the kind of base effect we have had for more than 2 years because of the COVID and other related factors, there is a strong rebound which is happening in the domestic demand. To play this, we have an active overweight on autos, telecom, real estate, and financials, which we believe would represent the kind of strength that we are going to witness in the domestic demand scenario. Looking at automobiles, we believe that there is still scope of growth ahead and valuations are reasonable. The same with banking, which has already delivered a very good set of results in the last couple of quarters. We believe the same trend will continue. And lastly, real estate, where we believe that stocks are still undervalued vis-a-vis the longer term potential. Coming on to our underweights, I think looking at the whole valuation spectrum, we still believe that the consumer, FMCG, durables, and services are still kind of valuations are on the higher side in spite of underperformance in the last 6 months to 1 year. We would wait for better entry points before taking a call on that. The second is metals, where we are kind of underweight, and also taking a valuation call, we are positive on IT and pharma, specifically healthcare, where we believe that valuations are extremely attractive given the longer term dynamics of both the sectors.
What is your view on market valuation challenges seen in mid cap and small cap space?
If you look at the valuation in the mid and small cap, I think they seem to be at a slight premium to the large cap, which gives rise to a lot of concerns whether longer term money or longer term alpha can be created. However, one needs to keep one factor in mind on both the indices, that they are kind of skewed by the top 10, top 15 overweights in the benchmark. Hence, you could find a lot of value-oriented opportunities or still stocks trading at reasonable valuation in both the indices, because both the indices, the number of coverage is extremely high. And the overall valuation, as I said, is probably skewed by the top 20, top 25 stocks, which probably may not fit in our strategy. Hence, we do believe that in spite of the headline indices, valuation trending above the longer term mean as well as trending closer to where the large cap is, there is still scope of generating alpha in both mid as well as in the small cap as far as the fund is concerned. Thank you everyone for listening.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.